Hello all, welcome back to financialfreedomandodyssey.com. My name is Mark and I'm here for another video. Today we're going to do something that I probably should have done many months ago, but that is reviewing my single stocks. So essentially we're going to dig into my portfolio and do a mini dive, I guess. I want to say deep dive, but some of them we went fairly deep and some we just scratched the surface on. So let's dive right in. One thing to call out, many of these stocks also trade in USD. However, as I hold them all in my TFSA, I have just bought the Canadian listed versions of them. First one up, we have Algonquin Power and Utilities, ticker symbol AQN. It's kind of in the anchor of my portfolio. Just taking a quick look at price movement, we're sitting at a 52-week low of $6.03, and I can hop over here and take a look here. So if I go to 1 year, so yeah, $6.03 on the 52-week low. 52-week high is $9.28, and it's been essentially down. Although in the last little while we've been ticking up, so starting to see some life. One big issue with this, and it's the same with a lot of the utility companies that is slowly starting hopefully to reconcile, is that interest rates haven't dropped as fast as originally anticipated, and these companies are having to renew some of their long-term debts at higher than expected rates. So yeah, it is slowly ticking up, but just starting, and that could go away. One thing to call out, unfortunately, the earnings report for AQN isn't out yet. It is out on Friday, which is March 7th. As I listed up here in the header, I'm just going to continue holding for now. I'm down a lot, like 50%. And yeah, I want to see if this rally will continue. Now, if the outlook is really bad on March 7th, I might just pull the trigger and move on, lock in those losses. And just another thing to call out, I do hold a bunch of VDY. So if I do sell AQN, I'm pretty sure it's still a holding in VDY, not one of the top 10s, right? And VDY is heavily weighted towards the top 10, but I would still have some exposure to participate in some of the gains. The second stock I'm going to talk about is Alimente Custard, ATD. This one, I'm not going to beat around the bush. I decided to sell on it. So I had watched this stock for many years, like since 2000, and I didn't buy, and I didn't buy, and I didn't buy. And I watched it go up and up and up, and then I decided to buy, and guess what? It continued to go up and up. Let's take a look at the stock here. So if I go back 5 years, it might have been even before this that it kind of first came on my radar. I think when it first came on my radar, it would have been probably in this range, late 2018, early 2019. And if I go back to the 5-year chart, this is where I kind of really watched it, and I watched it go up and up here. So I did start buying some in late 2022 into 2023, and then I have just been holding it for the last couple of years. And it's been up and up and up and down. YTD, we're at down 10%. So anyways, I decided to lock in my gains, just transfer it over. So I think I noted here, yeah, I was up about 12% at time of sale, and I added the proceeds straight to VDY. Just a few reasons why I sold. They're trying to grow. They're trying to grow a lot. That's going to require a lot of debt. So they did a bid back in August on the 7-Eleven stores, which was kind of cool. It was interesting to see them grow and grow. That bid was fairly affordable. It was like pretty big. Like I think it would have been 70 or 80% of kind of their market cap, what they were trying to buy on. So they would have close to double. That didn't go through. And then in the fall, they increased their bid by 22%. And that just seemed crazy. It would essentially mean that they were trying to purchase a company that was worth more than their company was, or at least the same size valuation wise. which would mean probably more dilution, more debt, and, you know, been down that path before in AQN. So no, thank you. Shopify. So Shopify has been by far my best performer, and it's a stock that I started buying as soon as it went under $100. Stock I watched for a long time. I wanted to buy it, but I kind of fell into the trap like, oh, it's so expensive, it's so expensive. This time it actually worked out for me. So if you take a quick look, again, I hold this one in Canadian dollars. If you go to 5 years, yeah, so I watched it go all the way down, and I think as soon as it kind of hit $100 here, kind of, what was that, February, maybe end of January, February, I started buying, and I bought down, 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 all the way down into here. And then I kind of stopped. I wish I kind of bought a little bit more on the way up, but yeah. So I did most of my buying Shopify from this range to this range. So I've got to experience, well, my gain's not that high because I started buying some up here, but anyways, a good amount. And as per always, main regret is you didn't buy more of the winners. So one cool thing here, and a thing that I'm going to continue to try to do is, hey, if you're going to own single stocks, let's actually pay more attention to the earnings call. So the earnings call was on February 11th. They did slightly miss EPS predictions, which did cause the stock to go down pre-market, but it rallied for the remainder of the week and was up 9% a week later. So earnings calls, as we know, can be all over the place. So like I said, earnings per share was the only one that was down. Everything else was they're consistent up 20 to 35% across all their metrics. The biggest one for them, for any kind of merchandiser, is the gross merchandise value, which was up 25% and change year over year for Q4, which is great. I did write a bunch of notes for the earnings call. I'm not going to read them all out in this video, but a couple of cool call outs. Their operating income finally surpassed that 1 billion mark for the year, which is awesome. Management believes that the current version of Shopify is the strongest and most durable. And they had a bunch of wins here. UPS support, another partnership with PayPal is starting to ramp up. A couple big brands, right? We got Champion, Reebok, some other Canadian brands like David's Bridal is a pretty big Canadian brand, I believe. Reitman's another big Canadian brand. They're getting some, big professional sports teams run their merchandise stores through Shopify, or potentially even using like point of sales. I can't remember exactly on the point of sales, but definitely merchant shops, right? So merchandise shops, I should say. So like FC Barcelona here, they have some pretty impressive quarter streak stats, right? So this is the 7th quarter in a row of 25% revenue growth or greater, 6 in a row of growth over 20%. I forget what that one was for. 9th in a row of positive free cash flow, 6th in a row double digit free cash flow. So honestly, looking up and up and up. Back to the stock last month, kind of going down. Maybe when I started researching for these articles, would have been smarter to sell here and then maybe buy some more, but hey, no one has that crystal ball. And just final call out here, as much as I would like to kind of not worry about single stocks, I think it would be a mistake to sell this one. So I'm going to continue to let it run. Number 3, TDD, Toronto Dominion Bank. So I trimmed this one at the end of January. I believe I included that in my portfolio update for the month of January. And so I sold about 20%. I was at a bit of break even. It is now up. So arguably I should have held on to it longer, but again, we don't have a crystal ball. So I sold some in here and we're up 5%. That's fine. I still have 80%. It can continue to run, and I hope it continues to run. I'm pretty impressed with the new leadership. And their TD earnings call was on Thursday, February 27th. So this past Thursday. One thing I was hoping to see that was down was their gross impaired loans are still ticking up, and provision for credit losses, 1.2 billion, which it was 1 billion for the same quarter last year. Total revenue though, first time over 15 billion, which is much higher than last year's 13.7. And EPS was slightly higher, revenue was quite a bit higher. And one thing I want to call out here, a friend of mine gave me a piece of advice a long time ago, which originated from his dad. He probably heard it from, someone else, as these things go. And it is, in Canada, the worst performer of the banks in the previous year will be the best performer in the coming years. And since TD was arguably the worst performer last year, I'm going to let that theory ride. I'm going to hang on to the remaining 80% TD stock of my position, and hopefully it continues to grow. TELUS. So I bought TELUS first off way back in 2020 and sold in 2021. I think I did a similar thing for TD. I also had Royal back in that time, but all that was sold for our current residents. And back in March of 2023, I believe with part of my tax return, I decided to purchase TELUS. So let's take a look at TELUS. Go to the 5-year chart. That's March of 2023. So yeah, it would have been somewhere in here, likely in the first half. And it's done this. Down 18%. But if you go to the last month, it's been, been on fire the last month. So that's why we're hold for now. Again, this one, same kind of category as AQN. They got a lot of debt. And even though interest rates are slowly going down, they're not going down that far. So that fast. So maybe that'll change. A couple things to note, TELUS, it is part of the oligopoly that is the Rogers, TELUS, and Bell in Canada. And I think TELUS has the best outlook. So I'm glad that's the one that I owe. As I said here, I believe it's in the best position. And at time writing, TELUS is up 13%. Let's see, is that still true? No, 14% now, so even better. So yeah, I did, again, try to listen to the earnings call, so here are my notes from it. There's some general frustration from management with the share price, especially saying how well it has been outperforming. I mean, it is finally really ticking up here, so they're probably speaking to just in general, right, long term, but it's making some good movements now. Management team is laser focused on hitting their targets and working on free cash flow, which is something that we love. They're looking at deleveraging and ratcheting down discounted drips starting in 2026. So the drip discount is something that kind of drew me into TD and TELUS back in the day. TD has already gotten rid of their drip discount, I believe, and then it looks like TELUS is going to. So yet another reason just to kind of wait until I think they've gained, where their fair value price is, and then probably sell off and dump into BDY or XCI, as I stated here. So I guess we're gonna have to wait until May of this year when they do. What that May would be, just next earnings call, and they are going to dive down, or they said they're going to dive into more of what their plan is to return the capital to shareholders starting in 2026 through 2028. So they missed a few targets. They free cash flow 2 billion instead of 2.1. They did do a lot of device discounts. I remember seeing TELUS and Kudo, one of their subsidiaries, just all over the place with discounts and special deals and that sort of thing. Let's see, so loans that we talked about, their average term is over 10 years. The average rate is 4.37. And yeah, so what's the Bank of Canada rate now? 3.25. And then, there's a Bank of Canada call on the 7th, I believe. Oh, sorry, let's show this here. So yeah, soon is 3.25. And yeah, so a lot higher than 3.25. I know that's not exactly how it works, but that's over 1%. You'd hope that you could get closer than 1% higher. Another thing they're working on, and nice to see, is that their payout ratio to go down, and their target is to get it between 60 to 75%. So it is super high right now. So hopefully we can see them starting to get that go down. Yahoo Finance, it is showing 232%. And that's the last of the 5 single stocks that I own. And just to wrap it up here, I do believe there's times, where individual stocks can be picked up at great value, and this can help to propel your portfolio. And over time, I just continue to lean more on indice and basket ETFs, right? Like I've walked through here, and the only one that is a really good story is Shopify. ATD was a decent story that, arguably I should have just sold a little bit earlier, and the other ones, 3 of the 5 have underperformed, unfortunately. So yeah, I think I'm going to just continue leading on indices and basket ETFs. And, if I believe a certain sector is down, there are ETFs for that, right? You can do VDY, which is heavy into bank, or you can actually just buy bank. Or if you don't like the leverage covered call, you can do HBNK, which is like ZEB, which is the BMO Equal Bank fund. So honestly, as one may guess, I think I'm going to try to get out of the single stocks. By the end of the year, I think I may still have TD and Shop, but that will likely be it for these stocks here. I may buy more. Dividend growth side, I'm going to keep leaning on SCHD and VDY with a little bit into XEI. And index-wise, stick with XAW and VTI. Might switch VTI for VOO. I've also been thinking about potentially looking at QQQ or QQQM. Probably go with the QQQM since it's slightly less Murphy, and that's MER. And Invesco was basically just created that to be more competitive instead of reducing QQQ. So basically the same thing. It is just marketing, and if people are going to still lean on QQQ because it's bigger and it gets some more money, why are they going to decrease it, right? They just give you another option. And I've done this before, and I think I'm going to continue doing it. I'm just going to keep individual stock purchases small moonshots, or small-ish, like larger than the moonshots, but still super small in undervalued companies, right? Like Shopify has become a pretty big position, but it started off quite small, right? It started off a couple percent. Now it's like 5 or 6%, I think, in my TFSA. Yeah, maybe not quite like that, but I think you get the picture here. Stick with the safety. Go small in stocks that I believe in, that I think are highly undervalued. And most importantly, if you are going to hold in these stocks, you need to stay on top of them and at least listen to earnings calls, keep your finger on the pulse. If not, just go with the index. And yeah, that's all for this week. A little bit longer video than I typically do. I tried to go pretty quickly through it, but me, I tend to ramble. So hope to see you guys here next week when I release my portfolio update for February. Cheers.